Let's now go to terminologies of manufacturing account. Manufacturing accounts, which are used by manufacturing companies to track and report the kind of cost associated with producing goods, involve several key terminologies and concepts. So for this course, I'm going to make mention of and explain some important kind of terminologies that's related to manufacturing accounts, which can add more to your knowledge. The first one is the direct material. These are raw materials and components that are directly used in the manufacturing process. Direct materials can be traced directly to a specific period and are a component of manufacturing cost. The second one is direct labor. Direct labor refers to the wages and salaries of employees who are directly involved in the production process. These are the labor costs directly attributable to manufacturing processes. The third one is the factory overhead. When we are talking about factory overhead, we mean indirect manufacturing costs that cannot be traced directly into a specific product. It encompasses expenses such as rent for the manufacturing facility, utilities, depreciation on machinery, and also indirect labor. Let's now go to the fourth one, which talks about prime cost. The prime cost is the sum of the direct material and direct labor costs. It represents the direct cost directly associated with production. Let me now go to the fifth one, which talks about factory cost. Factory cost includes the prime cost and factory overhead. In this instance, it represents the total manufacturing cost of a product or a batch of product. The sixth one talks about work in progress. Work in progress refers to goods that are in the process of being manufactured, but all these manufactured products are not yet completed. Work in progress, or WIP inventory, it represents the value of partially completed products at various stages of production. The seventh one talks about finished goods. When we are talking about finished goods, they are products that have completed the manufacturing process and are ready for sale to customers. The cost of raw materials or labor and factory overhead that are being associated with finished goods are being recorded. So let me go to the eighth point. This eighth point talks about the cost of goods sold, acronymically used as COGS. COGS represents the cost of goods that have been sold during a specific accounting period. It is calculated based on the cost of finished goods. Finished goods inventory at the beginning and at the end of a period. The 9 points talk about direct costs. When we are talking about direct costs, direct costs are the expenses that directly attributed to a specific cost object, such as a product or department. Direct material and direct labor are a good example of having direct costs in manufacturing process. Let me now go to the third point. This third point talks about indirect costs. These indirect costs are expenses that cannot be traced directly to a specific cost object, and they are shared across multiple products or departments. Factory overhead is an example of indirect costs in manufacturing process. I use that because it's a very good example for it. Let me go to the 11th point, which is allocated cost. The allocated costs are indirect costs that are distributed or allocated to products or departments based on a predetermined allocation method, such as labor hours or machine hours. Let me go to the 12th one. Sorry guys that I'm listing a whole lot of points. I have to do this because manufacturing account is a kind of wide account. The 12th point is cost allocation. Cost allocation is the kind of process of assigning indirect cost to specific products or departments. It involves determining the basis for allocation and distributing the cost accordingly. The 13th point is absorption costing. Absorption costing is a method of costing that assigns both variable and fixed manufacturing costs to products. It is commonly used for external financial reporting, and it's kind of required under generally acceptable accounting principle, as we all know it as GAAP. So the 14th point is variable costing. When we are talking about variable costing, it is a kind of method of costing that assigns only variable manufacturing costs to products. Fixed manufacturing costs are treated as period expenses and are not included in the product cost. So let me now give you guys the 15th point, which is our inventory valuation. What we mean by inventory valuation is the process of assigning a value to inventory on a company's balance sheet. For manufacturing companies in this instance, it involves determining the cost of materials, labor, and overhead included in the ending inventory. So understanding all these manufacturing accounts terminologies is a kind of essential and pivotal for accurately tracking and managing manufacturing costs, calculating product cost, and preparing financial statements for manufacturing companies.